which for the first time, ladies and gentlemen, has reached an overdone in the opposite direction reading, or an extreme greed reading on the edge finder. So what do I do with this? Because we went, like I said, yep, Alan's got it right. The market went from extreme fear to extreme greed. And when the extreme fear was in, guys, so I know that this is hindsight speaking, and I'm going to defend myself here, because you can go back and watch my content during this time. I was obnoxiously bullish about the markets because everybody else was so dang bearish. Now, the reason I'm touting this, the reason I'm patting myself on the back, is because that was the hardest time to be bullish, was when everybody was like, the trade war, Trump's going to ruin everything. And, people are terrified about what could happen. And I don't say that to be political, because people did the same thing under Biden. People said, oh, he's going to ruin everything with inflation. And my point is, people have a tendency to seek out and expect the worst. People get really scared and pessimistic very easily in markets. But to hold that opposite view as well, we are now, in my opinion, getting a little too frothy. People are getting a little too excited. People believe now everything is all good, that no trade wars, no trade issues, no nothing. It's all sunshine and rainbows from here. So let me tell you that, in my opinion, the quote unquote easy money was here. Now, I don't mean easy money in the sense of it was easy to sit through a painful market sell-off. It was not. But I think from a purely logical, purely statistical examples in the past of when market fear gets that high, your forward-looking returns in the market are typically positive. They're typically better than average, actually. You get a put to call reading like this, most of the time the market pays you to step in and take a big, scary bet to the long side. And that's what I did. So now, however, I use the put to call ratio all the time. It's my favorite sentiment indicator in the book. That's why I always pull it up on the streams. I think we're getting close to some opposite extremes that make me a little bit cautious. So when I look at the NASDAQ, look, I am bullish. There are many reasons, in my opinion, I have been bullish. I still am bullish. So don't get me wrong. I am not saying, oh, I think, we want to be shorting this market. It's absolutely, I'm not short biased. I am long biased, but waiting patiently for the market to come back to me. And I think it will. This is my opinion. I think that we're due to see a little bit of a pullback in this market. Maybe it's the next few days, maybe it's the next few weeks, but I don't think it's just going to be sunshine and rainbows from here. And I think that we may see a pullback. Again, I'm not saying I think we're going to have a giant retest of the lows. I don't think that. I just think that there's a good chance that we do see, a couple percent down, maybe a 5%, 6% pullback into this area of support. And if we don't get it, oh well. But I do like the idea. I love this setup quite a bit. So like where I think there is easy money again, quote unquote, and I'm going to use a different, where I think the simple setup doesn't necessarily mean it's going to work, but the setup that I like is this scenario. Let me use a smaller size. Basically, we cap out, some of that negative sentiment creeps back in, and I think that the opportunities there look really attractive. But the risk to reward, in my opinion, on NASDAQ and S&P and Dow Jones was great over here, and it's way less attractive here. I don't see nearly the risk to reward. And this is what I want you all to be thinking about when you're considering setups, right? You need to consider, what's the risk to reward look here? Because I'll tell you, if I was to put a stop loss on this, let me tell you, here's why the risk to reward. Let me give you a visual as to why I think the risk to reward here is not so great. If we're talking about NASDAQ and I wanted to put a healthy stop loss on this trade, the clear level that I see, the clear and obvious level of support is around 20,200 on NAS 100, this CFD that I'm looking at.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So my stop loss really would have to go here. And I'm not targeting all-time highs. I think we could break out this year. But do you see what I'm getting at here? The risk to reward is not very good. For me personally, in my trading style, you may have a different style. You may trade the 1 hour, you may trade the 15-minute chart. But from my perspective, many of you guys know very well how I trade. My trading strategy is not a secret. If you watch the stream every day, you'll pick up on it pretty quick. But my opinion on this is that the risk to reward does not look very attractive to me at these levels. Now, again, I have a whole bunch of stocks. I'm long Tesla, Nvidia, Amazon. I bought the Mag 7 heavy and it's been going quite well. Tesla, let's see what today's up 1%. Meta down a little bit here today. So I have a lot of stocks that have done phenomenally well in the bounce back. But do you see what I'm saying with this? This is where I'm saying, okay, the risk to reward to be buying at these levels does not meet my standards for like what I would take a trade on. And you might say, well, Nick, the market doesn't care about your standards. And you're right, it doesn't. I'm waiting for it. If it never comes back, if we do this, if we just go like this, then guess what? I missed a momentum setup on the NASDAQ or the Dow Jones. And if that happens, it happens. It's going to happen sometimes. So what am I going to do about this? Here's what I'm going to actually do. I'm going to wait. And if it comes to me, do you see the difference? Do you see the difference in risk to reward here? I didn't have to move my stop loss. If I were to buy right now, that's where my stop loss logically would go. That's really far away. That's a 9% drop. I don't really necessarily want to risk a 9% move because I'd have to have a tiny position size to justify it. So instead, to account for such a large stop. So instead, if I get this move and there's a 3% move, a 3.3% move on the NASDAQ, I trade the QQQ ETF, 3% on the money that I put in is valid. Not necessarily 3% of my account, but 3% of the cash invested. So if I buy, just as an example for simple math, if I were buying $100,000 worth of QQQ, I'd be risking about $3.3 thousand. Does that risk make sense? To me, it would make more sense than 9,500 or whatever it was, right? That doesn't quite make sense. I hope that breakdown made sense. This is why it is very important at the end of the day to wait for setups, because it's the painful thing to do, but it's important to do. Like we've had a wonderful win streak here, and congrats to everybody who is long. If you own some stocks, if you went shopping during this market sell-off, we've done very well with pretty much everything you could have bought, barring like United Healthcare, which, by the way, what's that guy doing? It's up 2-3% in the pre-market, but pretty much everything, like most stocks, have done remarkably well bouncing back. And so what have I actually done in my trading per se for this? Well, I've actually sold some calls, and I don't want to get into the option side too much because it's not very popular on my YouTube channel. I know not everybody's super interested. So basically, I have sold some calls against many of the stocks that I've owned, or that I do own. I sold Tesla calls. I sold Robinhood calls. These stocks have done phenomenally well for me. And because I think that the market is a little stretched and due for a pullback, I'm not necessarily shorting or selling all my positions, but I'll sell some calls against my trades because I think that there's limited upside from here personally in the short run. I could be dead wrong, and I hope I am because I would make more money. But I think that there's a pullback that could potentially be coming next, and if it happens, great. I can get some new buys in there. So something to think about there. Let's see. But yeah, put to call ratio reaching kind of an extreme level here to the opposite end. People are, I think, a little bit more confident. We also see that in the investor sentiment survey that came out. 44% people now feeling bearish. up to about 36% of people saying they're feeling bullish. That is a big jump from the 21% of people saying they felt bullish a couple weeks back, right? So sentiment has not necessarily greatly changed, but it's changing. It is shifting bullish, or in the process, I believe. If we keep going up, the sentiment in this market will continue to get more bullish. The gold market here is also sort of interesting. We do actually see, and this is one of the more contrarian bullish signals that I'm seeing here. Gold, we saw a lot of, actually we see it kind of normalizing now, but there was some incredible pessimism on gold that corrected yesterday because of course gold was up. So people who were, buying a whole bunch of puts on gold in the last few days covered some of those, it seems. So anyways, when we look at the gold put to call ratio, it's kind of back to neutral. Let's take a look at some other ones here. NASDAQ's also still very, very scared, which I find really interesting. We still have a very high put to call ratio on the NASDAQ, which is interesting considering you still have, right? So there's still your bearish sentiment. S&P is way more normalized or even bullish. People are feeling bullish on S&P. Interestingly, NASDAQ is still kind of super high put to call ratio. So something to think about there. Just DAX, what the heck is this? That's a crazy chart. Dow Jones, kind of getting closer to that kind of high demand for calls as well. Let's take a look at Dow Jones really quick. Dow Jones holding steady just above this 42,000 level. We've got to actually mark these as support zones now. Again, very impressive breakout here. The Dow Jones is still quite a ways away from its all-time high, and you may be wondering, why is that? Why 6.4%, still a good ways from its highs. Meanwhile, S&P 500 is at this moment only about 3.7%. Why is the S&P closer? Well, again, the big one is if we take a look at healthcare stuff, like XLV tracks a collection of, it's an ETF that tracks a whole bunch of healthcare stuff. Well, dragged lower by, of course, United Health Group, which had a dramatic drop. I mean, this is a horrifying drop of 53.5% for the stock in just a month. I mean, absolutely insane. Let's take a look at oil prices here. Oil prices on the daily chart, kind of something interesting to me. We do see resistance, at least for now, holding up on this market. We see, sellers around the 64 level kind of holding. I'd be really curious to see if we can actually get a breakout if we are not going into global recession, if we're going to see trade relations smoothing out from here. Oil would likely be a winner in that, right? Because the demand for oil gets threatened by recession and slowdown of trade. But if there's more trade and communications are going well and economies are doing okay, the demand for oil should remain elevated. So I do actually think that there could be a trade shaping up on oil. I've been circling this one. I've been watching this one for a minute here. It was getting a bullish reading on the Edge Finder. It still is. Yep, we're getting a +7 on the Edge Finder. Some economic data has come in relatively upbeat here recently compared to forecasts. We had good retail sales. It was better than expected, but still not amazing retail sales this week. Out of the United States, we had PMI numbers that came in better than expected. The employment data came in okay, right, with the NFP report. Trend has been shifting to the upward direction, but I'd like to see that resistance level break. You've got seasonality that looks okay and retail positioning. Let's just take a quick look at the put to call ratio for oil while we're discussing this, because oil is pretty top of mind for me in terms of setups. Take a look at oil. We do have still quite a bearish sentiment out there. Look at how crazy this went. Late April, people got super bearish on oil, and now people are kind of flipping back towards once more people feeling very bearish. When you get this reading very high, that's telling you that the put demand is quite high in the market. So I actually like that as a potential breakout signal. If you got everybody kind of buying puts bearish on the market for oil, and you do get that breakout, sentiment has been real bad for oil for a minute now. So I do think that there could be some breakout opportunities to watch for. You also kind of have this longer term breakout level that I think is really interesting. So if you get kind of the double whammy here where you get like a big push, retest, that setup looks, in my opinion, excellent at this time. I really like oil for a breakout and retest trade, but I don't currently love it at these levels, right? So I'm bullish, but waiting for technicals to kind of kick off and get going to the upside. So that's what I'm watching for on oil at this moment. We can take a look here. What else do we have on the list? The DAX sitting confidently above all-time highs, looking really interesting there. Chinese stocks still working their way back towards those highs.
Here. Why didn't the Bank of Japan want to raise rates? Why go long? Jen pairs. Yes, you are half right. So the Bank of Japan exited the NIRP, negative interest rate policy, and they are on a long-term path back to normalization. However, it's not that simple. They can't just hike all the way back to normalization, 2 to 3% IR. So from the last Bank of Japan meeting, this is the notes I've got. BOJ holds rates at 0.5 amid US tariff concerns, lowers GDP and inflation forecasts, suggests delayed and slower pace of future hikes. So yes, you would, in theory, long-term, long yen. Short-term, as Nick said, if we are going to get a dollar rally, the yen is probably the best asset. And I would also suggest the Swiss as well, as we are getting that liquidity flow from risk-off assets into the risk-on assets. Wow, a lot of people saying hello. How's everyone? It's good to see you all here. A lot of familiar names. James, what do you think about negative GDP reading of Japan? It does, Royal, exactly. Kind of essentially what I just said. Yeah, if we have a look at the current, actually, let me just double check what the inflation reading is in Japan, but I'm fairly sure that's also not ideal. Where is it? Yes, so CPI has come down. So inflation came down from 4 down to 3.7. It's now down to 3.6. So if we are having disinflation or lower or cooler inflation in Japan, that is not beneficial for that rate hike narrative. So it's kind of a case of just waiting, I don't see any short-term opportunities to go long on the yen at this time. I think it's more a case of very, very likely we'll see continued downside until the Bank of Japan start hiking rates again. Because the problem is the Bank of Japan is known for being slow. They're not fast movers. So if they are holding rates, the markets are probably going to expect them to continue to hold rates until we've got a very solid sign that that's not going to be the case, whether it be inflation increasing, whether it be the final result of tariffs, I don't know. So yeah, we'll see. Alan, hello. My top setups, I don't really have any. I mean, you say top setups for the week, it's Friday, my week's over. I was looking at the US dollar yen. I've been watching all of these all week, but I'm not taking any trades. I'm away next week on a bachelor party. So I think placing trades this week that I would then have to manage when I'm drunk with, strippers and models, probably not the best idea. So yeah, just more a case of watching the markets rather than actually placing anything. But what's encouraging is everything I marked up has worked out so far. So I was bearish on gold, or my overall idea was bearish on gold. I didn't want to even really pay much attention until we did fill this gap. But it seems like maybe not going to happen anytime soon. Euro dollar, I'm bearish. I am pretty much always bearish on euro dollar unless there is something like we had with the the German fiscal stimulus. That was a special situation, or if we've got a big central bank divergence between the ECB and the Fed. But generally speaking, euro dollar to me is always bearish. Oils would have been doing quite well. Euro pound, still really like euro pound to the downside. So if we can maintain this sort of level where we roughly are about now, by next week, I will probably start to build a DCA position short euro pound, looking for that reversion. Pound dollar hasn't moved really all week. It's just been stuck sideways. New Zealand US dollar also still looks fine. I was looking for an entry at this 50% retracement, which would have been great, but again, not for me this week. And yeah, brings us back to dollar yen. So that's it. Will there be any live for the OUM announcement? OUM announcement? I'm not sure. What are you guys saying crazy for? Whoa, crazy? What's crazy? Okay, let me pull up the Edge Finder. I'm a bit behind today. Yeah, let's have a look. See what the Edge Finder's telling us to do. It was the Dow that was giving us the best reading, or the most bullish reading. I'm not sure if that's still the case. It is. So we've got Dow, very bullish, score of 13, which is still great. We've got a very typical risk-on reading at the moment. So we've got the US markets, well, indices, generally speaking, US, Europe, Russell. I'm not sure about the Russell, just because of what the Fed spoke about, and obviously we've had a rate hold. So in my view, the Russell's probably not the best option right now. We've obviously got short yen, pound in New Zealand, risk assets long. So yeah, it's pretty sensible right now. Oil is also getting a nice bullish reading. Oil is still very cheap in my view, obviously relative to the average price over the past couple of months. I think oil is quite a nice buy at a relatively cheap price. So again, if we can maintain sort of the current price on oil, I might look to go long next week when I get back from the bachelor party. James will be live for the bachelor party. Probably not. No. That will be, what stays there. Oh, sorry, what happens there stays there. No videotaping, no pictures. Manu, I'm going to be honest, I have no idea what any of that says. Clyde, can you still enter what? And I'll be honest, if you're asking that question anyway, regardless of the asset, no. You shouldn't be coming on streams asking if you can enter or if you should buy or sell. No. This isn't like it's not a game where you can just get someone to tell you what to do and it'll work out for you. You need to be able to decipher these things for yourself. Can you check yen pairs? Yes, we can have a look at some yen pairs. Again, nothing overly interesting right now for me. However, I really like where dollar yen is. I think if you are going to be a buyer of this market, this is one of the best entry points I can find because this hasn't broken this uptrend. I mean, we've very clearly got this higher low here, filled in the gap. We've reached previous structure. This is also the 0.5 level on the fib. It's perfect, technically speaking, and fundamentally, I am bullish on the dollar, as I've been saying all week. New Zealand yen, also, if you're feeling a little bit not risk averse, I think New Zealand yen could be a good play as well. New Zealand dollar is a heavy risk on asset, so during times when investors are fearful, New Zealand dollar will be hit quite hard from obviously that capital outflow. So if we're seeing that flip, and we're seeing investors come back to risk on, New Zealand dollar is quite a nice buy in my view. And again, as we've already said, I think the yen could also be a pretty good short for the short term. James, which character would you be from The Hangover? I reckon I'd be the monkey. Other videos where you show how you manage trades. You know what, Flo? I'm actually working on a video today, basically breaking down the dollar cost average management. Because the entries are quite simple, but the management is very, I'm not going to say difficult because it's not, but it's complicated to try and explain. But it obviously can be done. But yeah, I'm currently working on how to do that properly because my swing strategy is so simple. I could explain it here where basically take a position, we'd wait for either the break, we'd wait for this retest to happen, we'd take a short, pretty much like FX Alex G, like that, but with information behind the trade. Or we'd use a fib. If the fib lines up with that as well, it's a lot stronger. Very simple trade management. I don't really have one, so let's take this trade for example. If we now drop into 1% profit, depending on the individual trade, I will likely move stop loss to break even and let it run. Or if it really depends, but the management for swing trading is very, very simple. However, for dollar cost averaging, it becomes a lot more of a hands-on job, not because you're moving stops and things, but because you've got to be able to actually, if you're interested in me explaining sort of the dollar cost averaging stuff, I will do it, but I don't want to. I've only got another sort of 15-20 minutes here, so I don't want to sit and explain it for the next 20 minutes if no one actually cares about it. I feel like James gets out of hand after a few drinks. I don't know. To be honest with you, I'm not really been drunk for a couple of years. I think the last time I was drunk was in my late teens. 26 now, so I don't know. Hopefully I'm over that phase of life, but you never know. James is away, your long cigars. Yeah, I need to pick up some actually. I'll get some from duty free. Yes, Alex is the guy with pink Bugatti. This is the thing actually, and I think he's a great example of, in theory, anything can work, because his technical approach, I think, is actually pretty solid. I don't really have any problem with that. But the problem I do have is that he has no context. So when we had, I can't remember when it was. It wasn't that long ago. We had something happen with the yen. I don't know if it was an intervention or if it was news. I can't remember. But he got caught in that, and he put an Instagram story up saying, I don't know what just happened. Trade just hit stop loss straight away. These markets are so hard, or something like that. And, you know, it was very clear what actually happened to the markets, but he had no context. He had no idea what was going on. But his technicals are very similar to what I do. So it's like that. Again, in theory, anything can work. But if you have context, you can sort of filter out those poor quality trades. Because break and retest and all that stuff happens on every time frame, all the time. So if you've got no idea where to focus, you're going to end up taking all of them, and you're going to lose.
We are pushing a little bit lower on SPX. We did break the morning range here, so it's fine. I mean, I think that this market is still very much due for just a pullback. You know, just a pullback would be great. Does it pull back into this area? You know, this 5,800. Do we actually come back and try to fill this gap at all? Fine. I do have a 590 by 580 bear put spread on the SPY. So if we pull back into 580, I'm looking to grab some profit there. It's not bearish. You know, like, I'm not bearish on the market. All I'm looking for is just give me something to buy a dip on, would you? So I'd love to see a little bit of a pullback. You know, even this area it's very shallow, but you know, maybe this market is just like, that's all you're going to get is that little 2 to 3% dip, and this market just melts up until we get to highs. You know, data is showing resiliency. I'm flabbergasted by how quickly the sentiment has shifted. I saw Nick post this morning, but you know, we've got the put to call ratio. It's like we're getting into extreme greed territory now. The CNN fear and greed is showing the same thing. I mean, we've went from, this was down to like 20 or less. This was like a 20 when we had March and April sell-offs. Like, this was extreme fear, and here we was just like, nope, it's greed again. But you know, market momentum. I don't think this is accurate because we're above this, but we had such a big recovery to get back above the 200 moving average, and our moving averages haven't quite, you know, crossed over yet, like the 50 and the 200 or the 100, the 200. They're not all pointed up yet. But stock price strength back into greed territory, breadth, extreme greed territory. Here's your put and call options, greed territory. So that's what you're seeing here in the Edge Finder, right? I mean, if I could go back further on this, I'm curious if I can go back. I mean, I want to see if we can go back like a couple of years, but you don't get a lot of these big swings in such a short amount of time. That is a big fear swing, and this is a big greed swing. And look, I think naturally the market overshoots either direction. It overshoots on the fear side, it overshoots on the greed side, and reality is going to be in there somewhere in the middle. So I wonder, like, if the market doesn't quite have what it takes to get to all-time highs, do we have just a little bit of settling? Do we settle back into here for just some, you know, pausing? Is this market just destined for just crazy amounts of direction? I did think about this a lot this week. I don't know if we expressed it like explicitly on these sessions, but I think we could be going into like another global bubble situation, because now that the US is at least shown some very quick resiliency, the Eurozone is still performing well, and they're not like, nobody is flawless here. Nobody's flawless, but the US is showing resiliency. The Eurozone, Asia, mainly China, Latin America, emerging markets, they've all been performing pretty well and outperforming the US this year. Okay. As long as the US remains resilient, I think other countries in non-US performance will be good. Dollar index, I still think the dollar index has room to pull back. Don't force shorts unless you get a trend line to break. Look, this whole thing, if this is a big swing from high to low, okay, I think the dollar in this area, and this area, I know it's not a perfect top, okay? But within this area, I would expect that this high is likely going to be resistant, right? So we have, any bearish pressure is going to come back in somewhere in this region and then hopefully start pushing back down to retest lows. That would be my dollar outlook. Like I'm pretty bearish, at least with the overarching trend, that this move is going to have at least a retest of the low. So if it's a resistance level, resistance area, that it rolls over, gives us a price pattern that we can trade back down to the lows. If it breaks the lows, then you're moving stop losses and you're getting some surplus below the lows. Okay, that's the dollar. Oil, your guess is as good as mine. We broke a floor, but we held the floor. We have just, key levels here, right? Key level support. I could see oil just staying in the middle. I think if oil goes higher, that's inflationary. Oil goes down, everyone's unhappy because you can't produce at the same margins. So it's probably just, it's going to be a lot of supply and demand manipulation to keep it kind of right around the $60 barrel. And I think everyone can kind of be okay. No major conflicts, no major uproars, no major mutinies. But it's kind of boring. I mean, I'm not bullish or bearish on oil. I just kind of watch and, get out the popcorn and see what happens on volatility. I am long natural gas. I'm trading this one out to 2017, so I'm trying to give it plenty of time. But it's also kind of crappy. It's like we had this huge push to the upside, and we might come all the way back down to the lows again. I have no idea. So it's just a trade. I hope I can turn the diagonal spread into profit. I'm selling calls aggressively to lower my debits. Gold. Gold, I've been waiting for a pullback for a while, and I was, sounded like an insane person, just like, I don't want to buy gold, and it's going up, and I don't want to buy gold, and it's going up. Well, eventually it peaked out at 3,500, and I'm not saying that it's going to continue to fall, but perhaps it's just an orderly correction. High to low, lower high to lower low, maybe a lower high to lower low, maybe a lower high to lower low, right? This area is a great spot. This area is a great spot. This area is a great spot. Buying gold between 3,000 and 2,800 to me is a bargain. If it's offered, nibble, nibble, nibble. I like gold at those levels. I think that's a good correction level. Okay, it's on this chart, XAU. I have some levels here. So I basically just looking at my daily charts, watching my 200 moving average. I'd love to see the 100, 144, and 200 levels hit. This bar count has gone over 400 bars on a daily time frame, which is pretty excessive. That's literally the same measurements that I took and why I was bearish on the SPY, the Qs, all the indexes this year, because they all had overbought conditions. This is why I was bearish on Netflix and Meta and Palantir and Carvana, and like there were 20, 30 stocks that had the same type of setup where it's like, we'll see a correction. Mag 7 was another one. Mags was also overextended. Okay. All right. 31,900. I mean, it's not, but do I want to buy it at 3,100? I mean, I know we bounced there, but I'm like, look, this is my chart. 100, 144, 200 moving average. That's what I want to see tested. That's what I'm willing to say. Okay. I mean, and I said this yesterday, if you want to buy it here, that's fine. But you talked about dollar cost averaging this morning. If I buy it here, I have to be prepared to buy it here as well. Because if I was going to average into an area, this is fine, because then it's like, okay, I'm participating in gold. If it goes higher, great. Okay. If it doesn't go higher, well, I want to participate more and more and more, and probably make sure it doesn't really break this trend line. So I want to keep dollar cost averaging into this area. If this goes back up to retest highs, hooray, that's my trade. I'm happy. If I want to hold it for, upside forever, fine. But at least making a trade out of this, I need to get a dip or a pullback. Silver, still like silver a lot. 29 is good support. 26 is great support.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.